Hey, this is Justin with DayTradeTheMarkets.com on Friday, November 2nd. I can't believe it's November already, but anyway, today is Friday, and wanted to look at several markets. Look at the ES, the mini Dow, the Russell, crude oil, gold, and really focus on them from the perspective of making sense of what's going on short-term, directionally, using relative aggression bars. Here's the ES, even the S&P market, with all of the different pieces of evidence or tools that we use on a given day, and I'm going to go through this and kind of help make sense of this in just a moment. But I wanted to kind of start from the idea that the software that we use and the way that we look at the market, we're looking at some bigger picture evidence or intraday, and then some real-time shorter term evidence. And within each of those, we look at our bigger picture bias, some big picture support resistance levels. And we also look at a few things: deceleration bars, we have a directional filter, we have real-time support resistance zones. And then what I want to focus in on today is what we call our relative aggression bars, however. And the relative aggression bars are telling us in real time during a given time period which side, buyers or sellers, are more aggressive in the market, because it's actually aggression that moves the market. And I have more information on that. If you would like me to expound on that, I can certainly do that. Just send me an email in terms of kind of what relative aggression really is. Just let me know on that. But relative aggression, what the software does is it tells us which side, buyers or sellers, at any given time is more aggressive, because it's, again, aggression that moves the market. And then we have three levels of relative aggression within both buying and selling. We have the moderate, strong, and extreme. Okay, so what I wanted to do is look at a few markets today and just take off everything, take off all of this evidence here except for the relative aggression bars, just because that's kind of our first building block, the first thing that we look at. And then when I'm done looking at several markets with that, I'll put everything back on the chart and show you how we use this idea of waiting for several of these clues to line up, and when you have that, you have a pretty good edge on the trade, and how you can make sense of the market in that sense. So hopefully that makes sense. So here's with everything on, like I was saying, and next let's look at the chart with everything stripped off of the chart except for the level 2, and level 3 aggression bars, and what we also call high velocity moves, which is very similar to a level 3 aggression bar, just a kind of different way of getting to that information. So as the day opened, we gapped up, and there was no real major evidence until about 40 minutes into the day, where we had this level 2 selling aggression bar. And that's our first structure of the day, which we really want to focus in on. And we always ask ourselves, when we have one of these structures, is there follow-through? In other words, if it's a selling structure, do we get follow-through or do we get rejection? And that information on its own, I mean, several people that we work with, that's all they look at are these aggression bars and trade simply off of those. And there's a lot of ways you can actually do that. But for now, I just wanted to kind of talk about that idea of rejection or continuation. And so we ask ourselves, okay, does the high hold? Yes, it does. Okay, then we get follow through below it. So that's a pretty good indication, as that's the first major structure of the day, that at least in the near term, bears are in control of this market. And our filter, if it was on there, would also help determine that as well. Then we get another level 2 bar. We ask ourselves, does the high hold? Yes, it does. Here is then a high velocity move, which is a little bit stronger of a structure, and we ask ourselves, does that high hold? And until that high is taken out, we have to say that bears are pretty well in control of the market. Now, we did get a level 2 buying aggression bar here, so it's showing us that this is not going to just go straight down, but until this high is breached, we have to assume bears are more in control of the market. And you can see that as we had a little bit of two-way action here, the market did trade within a pretty tight range for a bit until it broke out lower on this level 2 bar. Again, continuation or rejection? Well, that high holds. Level 2, level 3 bar, same thing. We ask ourselves, do the highs hold? Yes, they do. And we have several trades that we just base off of selling the highs of level 3 selling aggression bars, or selling the highs of high velocity moves. So again, bears are still in control. So to this point in the day, using our first building block, these level 2 and level 3 bars and high velocity moves, each one of these has been essentially won by the bears, and the markets just kept selling off. Here's a level 3 bar, does the high hold? Here's a the level 3 buying bar that got rejected right away. So I mean, you can just see that when we had buying structure, it pretty well got rejected. When we had selling structure, we had continuation. It's telling us on this day, bears are certainly in control. Okay. So we can look at the same look to do the same thing. Let's look at the Russell. Okay, same idea. What's the first structure of the day? It's this level 2 buying bar. Does its high hold? Yes, it does. At the same time, we had a level, so we had a little bit of a battle right there. We had a level 2 buying bar, which is that dark green. You can see we had no continuation higher. Its low did not hold. In fact, it sold off with another level 2 bar. We keep asking ourselves, do these structures hold? Here's a level 3 bar making a new low. Here's a high velocity move making a new low. Level 3 bar, level 3 bar, level 3 bar. You can see that every selling structure, every selling level 2, level 3, or high velocity move had continuation. It's telling us, it's confirming bears are in control of that market. Same thing, I'll just go over the YM quickly because it's obviously they're very similar. First structure of the day was actually a level 2 buying bar. You can see it got rejected. Then a high velocity move, high held. High velocity move, the high held. High velocity move, the high held. And so forth. High velocity move, high held. High velocity move, the high held. Here's a level 3 bar, the high held. Okay? Level 3 bar, the high held. It's telling us throughout this entire day, the whole way, bears were in control. Every time the bulls would try to make a move like they did here, it was rejected. Okay? So that's the same idea. Same principle would apply. Let's look at the crude oil market. First major structure of the day is this level 3 selling aggression bar. Okay, right away we had continuation lower. That's telling us, very, very clearly bears are in control. Here's another level 3 selling aggression bar. Here's an attempt, a level 2 buying bar. They got rejected right away. Another level 3 selling bar. Here's the first time that here was a level 3 buying bar off of the low of the day at the time. We attempted to make a push higher, and you could see we did have a bit of a bounce, but it was quickly rejected. And we did have some back and forth right here, but you can see that generally speaking, bears were in control of the market. It certainly got a little more choppy starting in here, as opposed to this straight vertical move here. But you can see that our first structure of the day was this level 3 selling aggression bar, and quick follow through. It's telling us pretty clearly in the crude oil market the bears are in control, and until there's other evidence, that's certainly the side you'd want to be on. And even in the crude market, the same thing happened yesterday toward the end of the day, where we had this level 3 buying bar rejected on the high of the day. Okay, if we look at the gold market, same thing. First structure of the day is a combination high velocity move and level 3 selling aggression bar. Until that high is taken out, we have to assume bears are in control of the market. You can see that we tested that low a few times and then broke out on a level 3 selling aggression bar. Its high was tested, it held. Here's a couple level 2s. This level 3 buying bar got rejected. Okay, again with the gold, same thing. If you look at yesterday, you can see that the selling started yesterday where we had this level 3 bar, the high held, level 3 bar, the high held, and so forth, and into today. So again, just wanted to look at that first building block, which is the relative aggression bars, and how just looking at if there is follow through or if there is rejection gives us a pretty strong clue as to the likely direction of the market. So if we, taking it a bit further, going and adding the rest of these pieces in, let's just look at the E-mini S&P chart from today. So heading into the day, we always try to look at our bigger picture as well. Our bigger picture bias was actually up. We would have expected it to be up. And our next target up was actually at 31. And I've got this line drawn there. And overnight we hit, with the news, it wasn't really overnight, it was just before the regular trading hours opened with the employment report. We hit like 31.75, I think. So we tested our next target higher right there. And our next support lower was going to be at 18.50. And this is stuff we lay out in our member center every night ahead of the session. Okay, so that's kind of the basis for or the game plan going into the day. So we'd rather be on the long side, all things equal, but we want to obviously monitor what structure happens during the day. But we'd obviously rather be on the long side, and we're looking for the 31 area to be the next target higher and see if that acts as resistance or if we can make another push through. And then we're looking for the 18.50 area to be support. Okay, so that's heading into the day. Again, with our ES, the first structure of the day is this level 2 selling aggression bar. Here's another one. They both have follow through. Our filter is red. So at this point, it's telling us bears are pretty well in control of this market, but it's not a slam dunk because, again, our bigger picture bias, we'd rather be up, and we're still, trading near this 1850 area, which we expect heading into the day to be support. And you can see that, we had the market consolidated within this support resistance channel that formed in real time. So, getting short here made some sense, getting long here made some sense as well. In fact, I would say these long trades actually right in here made some decent sense in that our bigger picture bias was up, our filter was actually green at the time, telling us that some buying order flow was coming into the market, and we had a support level at 1850. The caveat being most of our structure to this point, if this is making sense, was bearish, including this high velocity move. Okay, so that's all well and good, but once we broke through this 1850 support area on this level 2 bar with pretty well immediate support, filter turns over to red. We're below our 1850 support. This market is pretty well dominated by bears, and that's what I was also showing with when you looked at the Russell chart that I showed earlier, and you looked at the mini Dow chart. That's confirming that bears are pretty well in control of this market. So at that point, we have to say, okay, the structure of the day is telling us, the evidence is telling us, bears are pretty well in control of this market. If the bulls were going to make any kind of a stand, it would be right in this area at this time. It didn't happen. We broke lower. At this point, you definitely want to be avoiding any long trades and look to get short any opportunity you can. And certainly some of the more obvious opportunities to get long would be toward the high of this level 3 bar, which also coincides with this near this resistance area. Our filter's red. Same thing near the high of this level 3 bar as well, which is also near this support resistance zone, I should say, with some decelerations. Our filter's dark red. I know I've gone through a lot of material, and if you're not too familiar with this software, it might not make a ton of sense, but I just wanted to kind of show how the idea behind what we do is take the various pieces of evidence. And this all makes more sense as you go through the training and everything, but you take the various pieces of evidence and you ask yourself, if you're thinking about getting long or you're thinking about it getting short, one of the things we talk about is kind of do a +1, -1. And so if you're thinking about a long, how many of these pieces of evidence support that long? If you're thinking about a short, how many of these pieces of evidence support the short? And if you can get to a situation where you have a +3 or +4 or higher, it's a pretty high edge trade. It does not mean it's going to be 100%. It doesn't mean it's going to work every time. But you know that if you wait and only take trades that have +3, +4 or higher, you're going to win more than you lose. Okay, that's the idea. You're trying to increase your probability. And with that, you don't have to just trade. That's if you wanted to use this as a standalone. We have a lot of people that use this as more of a decision aid. In that you might have a method that's pretty good, whether you're making money or kind of breaking even. I would say in almost every situation, if you utilize this evidence that this software provides, because it's a unique form of evidence, it's different than anything else that's out there. If you use this as a more of a decision aid, so if you're thinking about a trade setup, does this software, do these tools, does the relative aggression, does the structure, does the support resistance, does it confirm your trade idea? And if so, that's an added level of confidence. I would pretty much assure you that your percentages of successful trades, when you can confirm with this software using whatever method you're using, is going to go up. And conversely, if you have a situation where you're thinking about a trade, but maybe the structure within our software is saying, well, you might want to think twice, that's a way that you can avoid some losing trades. And obviously, if you can just think about the math for a second. If you can get into just one more winning trade a month, or one more winning trade a week, or just avoid one more losing trade a month, or just one more losing trade a week, if you do the math, it's actually an interesting exercise to do. If you can just avoid one loser, do it what your average loss is. If you can avoid one loser per month, or one extra loser per week, or even one extra loser per day, do the math. I think you'll be pretty stunned. So anyway, I feel like I'm rambling a bit here. I'll get it finish up the video, but hopefully that made some sense. You could see how the relative aggression bars were telling us in most of these markets that the bears were pretty well in control. So if you have other questions about this, let me know. I'm happy to answer any questions that you might have. And otherwise, have a great weekend, and we'll talk to you soon.